Traders, welcome to the Top Tier Outlook. Happy Sunday, everybody. Hope everyone's had a great weekend and got to spend a little bit some time away from the charts, but it's almost time to get back at it. And that's why we prepare on a Sunday evening. I'm here in my office doing my chart work because chart work pays. And we're going to be taking a look at what we have as we start the session. So at 6 o'clock, the reason the show is at 6 is we get a look at the Sunday open, which is the Asian session open. And the futures will start moving and grooving a little bit. Now, obviously, this is a far cry from what we'll see when the Asian session is further underway, which is an overlap of Auckland, Sydney, Tokyo, Hong Kong, Singapore. As it all gets going, around 2 a.m. Eastern, Europe joins the party. 3 a.m. Eastern, the UK joins the party. And then 7 a.m. is a really early part of the New York session. And by 9:30, of course, we're all US, UK, Europe, all trading. So what we're taking a look at is basically a very early look at the Asian session. Now, just because it's the first look doesn't mean that's what we're going to continue to see. But there's a few things that I'm going to look at as we start this. So there's a couple reads we have to think about when we start a morning. And this is kind of a morning, not for us, but for over in Asia. And the first thing I'm going to look at is, where did we close on Friday? What was that closing opinion? Because the closes on a daily are the most psychologically significant because they're the most psychologically widespread. More people are wondering, am I up or down in my investments on my trade in whatever position based on where the closing price was? So what we ask ourselves is, when folks look at the NASDAQ or the S&P or bonds or gold or whatnot, the first thing they're going to ask themselves is, are we above or below where we closed? And there are a lot of interesting, let's use an idiom here for a moment, right? I'm going to English major geek out for a second. Let's use an idiom, line in the sand, right? What does that mean? That there's an opinion shift depending on which side we are of it. And if we think about lines in the sand, again, just an idiom, just a saying, what are they? They could be things like the previous session closed, the PSC. They could be things like clearing ranges, right? The clearing range high-low. They could be things like the initial balance. That's another one, high-low. That could be things like a volume-weighted average price. It could be a point of control. So there are lots of ways that many people are thinking about, what's the line in the sand for sentiment? But the first one we get, and I mean, this is an easy one to put on the chart, right? We've been doing this, back in even the futures rooms days. We've been doing this, which is to say, what is going on with current price in relation to the closing price of the previous session? And again, PSC. So that's one way we can understand line in the sand from a sentiment point of view. How easy is it to do? Really easy. This is the way we've been teaching it. In fact, some of you might remember, let's go down our memory banks, and some of you might remember in 2022, I think it was early 2022, we had a day trading playbook class, and we were teaching all the things that we had been doing throughout 2021, what was working, what wasn't working, what tools are working. And we put that together in a class in early 2022. And one of the things we started talking about were things like volatility, volume, and things like sentiment. How do we read that kind of thing? So some of you probably remember, oh yeah, Rag, this is something we've been doing for a long time. For those of you that are new to that, right, on a Sunday when we're looking at the Asian Open and we're wondering, what do we take away from this? The first thing we can do, whether it be Sunday evening or whether it be tomorrow morning at 9:30 when you're joining me for Charts and Coffee, we're just going to look at where is price in relation to the previous session close, right? So that's all we need to do. Now, if you're wondering, different markets have their own closes. So for the most part, I'm not really looking necessarily at the way the futures are closing, because we know the futures trade almost 23 hours. But what we want to know is, for example, with the NASDAQ, where do the futures close in relation to Wall Street, the cash close, which is 4 p.m. Eastern. So this should be calibrated to the biggest stop-start in the market. So that's where 4 p.m., the cash close, is what we use. So all you need to do is go back to this, a 5-minute time frame. It's the way I've been teaching it for years, right? At 3:55 or 15:55, I know that candle closes at a certain price. right? And then once I get that close, then I know. And really all we're looking to do is take advantage of that. Right? It's pretty simple, yeah? And so when we know what that cash close was, where the market closed, and it's probably even more important on stocks, right? It's even more important that we know where these are on those 9:30 to 4 stop and starts. Is it important in terms of indices? Of course, but really important when it comes to stocks. So those are things that we're going to look for right away. And then underlying structure. Let's get to the structure part of this. So we've taken a quick glance at something very simple to do. And that is, where was the cash close, the previous session close, that closing line in the sand. All right, then we go to what? Then we go to the structure of the underlying market. So let's take a look at bonds here together. All right, let's take a look at bonds. Let's take a look at ZB in the early part of the Asian session. So where are bonds right now? I want to look at bonds again from the perspective of where were they? Are we above or below that? We're actually above that. So that's great. Not by much, but we're above that or right at it. So the thing that I want to ask myself is, when I'm looking at this chart and I'm looking at the structure of this daily time frame, one thing is really glaringly obvious when you look at this chart. The bonds are in a downtrend. Let me show you here. Take a peek. Bonds are in a downtrend. And why are bonds in a downtrend? Because it's taking the Federal Reserve way too long to just finally communicate to the market, yes, we're going to cut. We're just not sure when we're going to do that. And it's probably going to take longer than we think. Oh, but wait a minute. They've already told us all those things. So what this adjustment is not to whether or not the Federal Reserve is going to cut. Although there is kind of this whisper now of, oh, maybe they won't cut, or when are the next hikes going to be? Remember, gang, cutting cycles just prepare for hiking cycles. Hiking cycles just prepare for cutting cycles. And some folks just run out of ahead of the narrative. That's kind of where we are. Once the cuts begin, all that will stop, because we will have the reason that we rallied in the first place, which is expecting lower yields, expecting cheaper money, lower borrowing rates, and of course, lower Fed fund futures. Okay, so that would then map to the strength that we have been seeing in equities. But since it's taking longer, it was supposed to be, it was supposed to be June. Well, actually, once upon a time, it was supposed to be maybe March. Then it turned to June. Then it turned to July. Now it's possibly September. Taking too long is what the bond market is saying. You're not cutting rates on what we thought you were going to do in terms of a timetable. And now keeping rates higher for longer might actually be damaging to the economy. And that's where bonds start to tell those two stories mostly. One, we have to reflect what yields are doing, maybe 3 to 6 months out. And two, you're taking too long, Jerome Powell and company. And then we start to see yields go up, and which is why the ZB futures are going down. It's also why the US dollar is going up. What's the easiest way to see that? Look at the 6E. 6E is the relationship of the euro versus US dollar. Rather than the US dollar basket, which is a whole bunch of other currencies, why don't we grab the relationship that's 58% of that basket? And that's this thing right here, the euro. So the reason that the euro is moving lower and really chopping is all the uncertainty that's affecting bonds too. The US dollar will move lower when we anticipate rate cuts are really going to happen, and then we finally get them. Any central bank cutting rates, the currency of that country will start to fall. That's just the way it moves. So if we're not seeing that the US dollar falling, we're seeing the euro falling. It means the US dollar is going up. It's an inverse or negative correlation. So euro goes down, US dollar goes up. Tick for tick, gang. It's the tightest correlation of any two markets on the planet. This is kind of a strong dollar. Not an uptrend, not necessarily, but it is starting to look like one. So if the euro is in a downtrend, US dollar might be in a fairly fresh uptrend. That's not going to be generally something that's indicative of accommodative monetary policy. And by the way, equities will hate that. So you might say, Rob, is a strong dollar and higher yields affecting equities? No, that is not the connective thread. What it is monetary policy moves bonds, monetary policy moves the US dollar, and monetary policy moves equities. They're all keying in on the same thing. Accommodative monetary policy, in other words, cuts, is going to help equities up, lower yields, and weaken the euro, weaken the dollar, strengthen the euro, right? So they're not keying off each other. And that's a common fallacy. They're not keying off each other. They're keying off monetary policy. Because if they keyed off each other, the overall trend that we've seen in the S&P from January to the end of March, higher, would have been the same trend we saw in the bond market. It's not. Would have been the same trend we would have seen in the euro. It's not. So they're not affecting each other. Please know that. I know that gets said a lot, but that's categorically incorrect. But they are being moved by the same single catalyst, monetary policy. So that's what all of those are saying. And yeah, equities are going to be disappointed. This is a disappointment uptrend break. This is not quite a downtrend. And I'm not ruling out that we might, at this point, be looking at an oversold daily time frame of the S&P. And if we can start to put together a string of days where we start the day above the previous session close, so we're on the bullish side of that line in the sand, then we start to put in higher lows. That's really the backbone of movement higher. And higher highs are what get attention. But higher lows would be great because we've been putting in not just lower highs, but also lower lows, right? Both don't have to happen, by the way. But what we really want to see are higher lows and eventually higher highs. In right now, see the signal that happened here on the 19th? We really want this to kick in now. So the 19th said, yep, we got the signal for an oversold market. And yep, we hit the daily price movement range, even though it was a little bit on the higher end of volatility. Who's surprised by that? It was OpX, right? We had options expiration. So once we had that, right, now we can say, hey, there's a couple things that are happening all at once. And I'm just going to remove these lines here. Actually, you know what? I'll keep them because they're actually pointing out the super volatile days that we've had through April. But I have this OpX day, which, by the way, if you look at the S&P, look at the wick left over. This is why I was saying on the Friday video that I cut, why that was actually a very small but bullish thing. We didn't close near the lows. The S&P futures, this thing that trades nearly 24 hours a day, did not close near the lows. It snapped up and left a wick behind. And then now we're trading above that previous session close. So these are all things that we want to see, right? These are all things we want to see. And if we can start to put in those higher lows, this is heading in that path of possibly a retracement. And a retracement to where? I look around the 51.60 area. That could be a pretty interesting retracement. And, you know, we might be able to see something a little bit higher. Actually, I'm a little curious here. Let's see. If I was going to go from this last major move, yeah, that's 51.24. If we're going to look at where the sell-off began, that's around that 51.48. Wow. Okay. So we need to look at this area between 51.25 and 51.48. Call it 51.50. Great album. And we'll see what happens with this bounce. It's on an uptrend. Can we retrace some of the sell-off that we saw after the very wild action we saw for about 8 days, eight calendar days? All right. As always, gang, if you have any questions, feel free to type them in and we'll take a look at what else is going on in equities. Now, a couple things to remind everybody. It's really easy to kind of fondly recollect how great semiconductors and how great the uptrend to all-time highs in the broader averages was for Q1. That is not where we are right now. Semiconductors, communication, a lot of those tech stocks like NVIDIA that were absolutely in fuego in Q1 are not right now. But that doesn't mean there aren't trends worth looking at. I'm going to show y'all right now what are some trends that are worth looking at. And here we go. Ooh, that's bright. Let me, let's go back to there we go. So let's take a look at those sectors. When I look at month to date, what has been happening specifically in April? Is this dominated by the strength we saw in semiconductors and communication and generally things like industrials, financials? Not even a little bit. It's a whole new group. And this is what is so difficult with having a really hot market. This was a hot market we had in Q1. Trends were strong, resilient, buy the dip worked, right? And now what do we have? Now we have gold strong, silver strong, copper strong, crude oil strong. And that's why we see atop this list now a completely different group. Gold miners, miners and metals, energy, utilities, that's an important one, uh, oil and gas explorers, and staples. Of the top six, 2 out of 6 of them are what are widely considered defensive sectors. Sectors where if risk appetite, if the tech market and financials and industrials are not moving higher, where do traders kind of hide out in a volatility environment, in an environment where there's maybe a little less optimism about stock market growth, economic growth? A little unusual that that's happening right now, but it just goes to show with the Federal Reserve setting us up for rate cuts and then taking forever to get there, there is going to be a letdown. And the fact that utilities and staples are up there with energy, miners, metals, gold miners, it tells us something. And that's okay. What does it tell us? We'll look for trends in those corners. Let's go take a look at them. Let's go take a look at XLP. So XLP, consumer staples. And there's a whole group of stocks, obviously, in this. Now, is this an uptrend? So just because something's a relative performer doesn't mean it's in an uptrend. It simply means from a relative performance standpoint, which is just a comparison. That's a fancy multi-syllabic way to say, hey, if I'm looking at a bunch of stuff, how would I rank them in order, right? Just because you're in the top doesn't mean you're positive. It just means you're positive than other things in the list. So if I take a look at XLP, it's hardly strong. It's just some of the less weak names out there. Now, let me contrast that with GDX. Let's contrast that with GDX. Look at that uptrend, right? So here's another way you can look at it. You can look at it from the perspective of just the individual sector, or you can break it down from the standpoint of what I call a multi-chart. Let's do that here. So there's a question here about, here we go. What about GD, GE, RTX? So always put them in order of their weighting, right? I get a lot of people saying, hey, Rog, SMCI and semiconductors, and they're sometimes shocked to find out SMCI is not weighted within the SMH. It's really a Russell 2000 kind of name. So make sure you know what's weighted in the sector. In this case, what's moving well. I agree. I would absolutely keep an eye on GE and RTX. Absolutely. Is this an uptrend? No, but you have 2 uptrending stocks in a choppy sector, meaning the industrials. Murph is asking, when using Koyfin, sure. Do I usually look at month to date or quarter to date? It depends on my time horizon, Murph. So if I'm looking at a trend that's continued for a while, or if I have a longer term time horizon, meaning I'm looking at a longer term time frame and I'd like to be in that trade for more weeks, if not months, longer normalized performance look back. But right now, we're dealing with an environment where for 3 months, we had a fantastic uptrend, which broke in about 2 weeks. Now, it's not in a downtrend. It's just not in an uptrend anymore. And there is a difference. Yeah. So now I'm about halfway through April. Month to date makes sense. But even 1 month is fine. But I think month to date, looking at April, separate from the influence of March, would make a lot of sense. But look at both. Look at both, Murph. I think they're both really important to look at. ESP asks, if the market expects rate cuts to possibly take place around September, agreed. Should we prepare for continued volatility through then? ESP, it's really going to matter depending on any of these inflation metrics that we're going to get. So this week alone, we're going to have 2 big inflation metrics. One, we're going to get the core PCE. That's the biggest one. That's the Federal Reserve's pet inflation number. That's their metric. That's the one that's built into the models. The other one is the University of Michigan inflation expectation, which in and of its own right is important as well. So we're going to have to go from these hot zones, these high impact schedule events. We have to go from hot zone to hot zone and make that decision. But generally, based on what I see right now on the charts, ESP, what we see in the volatility, yes, I'd have to presume we're going to continue with some volatility until the trends come back. And they're not right now in any way looking like they want to. Let's go back to the charts here. Let's go back to our layout here. Okay. So when I'm looking at what's happening on the charts, and as soon as they come up, there we go. When I'm looking at what's happening on the charts, this is not a downtrend, but it is bearish chop. and it is oversold, which is to say if we're going to bounce, Monday, Tuesday is the day we're going to see it. And we need to take out the Friday highs. We need to get back above, say, 17,550. But what's really going to be important is to stay above that close, that PSC, that previous session close. Near term, staying above that line in the sand, that PSC is really important. Again, what is the PSC? What is that line in the sand? It is the closing price, the cash close. So what was the close at 4 p.m.? So that would be on a 5-minute time frame. Look at the 355 candle. When it closes, boom, that's the close, right? Really easy. So that's a very simple thing to just look at the chart and say, oh, that's where we closed. Are we above or below that? Very simple, yes? Okay, so if we can stay above that near term and then eventually take out the high from Friday's session, that would be a really powerful thing to see, especially on a week that we're going to get two major inflation metrics. All right, so the next one is, make sure I'm keeping up with these questions, and thank you as always for them. Could equities in XLF, sure, be considered long candidates on the daily as most earnings have finished? Great question, Jack. Is it time to get back into financials? I don't know yet. And here's why. Yes, you're right. Most of those heavyweights have reported. And I'm getting the same thing on XLF that I am on the NASDAQ and even the S&P, which is an oversold signal in the context of a non-trending market where overbought and oversold would be the mindset. And we're bouncing and respecting, and this is really important. We're definitely respecting, as you can see here, we're definitely respecting the daily price movement range, which has been a major issue on the indices. In this case, the daily price movement range has only really been just smashed twice, once on the 4th and then once again on the 15th, as opposed to about 6 or 7 times on the broader averages. So this sector, which is an important piece of the Dow and the S&P, is pretty well organized despite the massive sell-off we saw in JP Morgan and the gap down with earnings. I do believe it's time to start looking. I don't know if it's quite time to get in, but if we can find some relative outperformers, I definitely would. So how would we do that? Crack open the XLF and find if there are any uptrends still here, or at least what the least bearish symbols are. And how would I do that here? Well, I can tell you right off the bat, the most bearish symbol is Visa. That's just a big cup of nope. All right, what's the most bullish? It's actually Wells. So how would I determine that? Look at the labels. That's where we start first. Is the momentum bullish? Is the trend bullish? Is the momentum neutral or bearish? Is the trend neutral or bearish? So momentum being bearish is that magenta color, green is bullish, and that gray is neutral. All right. So remember, when we're looking at this layout, what we're looking at is the high concentration weighted names in XLF. It's not all of the names, right? It's not all of them. It's what are the high concentration weighted names. Now, these are going to change from time to time. They're going to shuffle up from time to time. So you have Berkshire, JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, Goldman has swap spots with SPGI. So nothing major in terms of the makeup there. Then you've got American Express. You've got PGR, which I really don't trade, but PGR would come in here in the 10th spot. And in the 11th spot of the top 11 names are Morgan. Now, are there more in here? Absolutely. But once you get past PGR, once you get past Morgan, you're you're basically at 2%. Let me compare that with Berkshire. Berkshire is 13.25%. JP Morgan's 9.5%. So at some point, we're getting lower and lower and lower in the weighting, therefore the influence in the sector. Are there more names here? Absolutely. After Morgan is Schwab. Actually, after Morgan is actually Citi, then Schwab, then BlackRock, then Chubb. So those bottom 5 of the top 15 will sometimes compete for the 10th or 11th spot, but it is not a high concentration weighted name. Now, does that mean it's not in a trend? Well, if you take a look at Citi, Citi is not in a trend. You take a look at Schwab, Schwab is in a trend, right? So if you're looking at those names past the 11, I'd look at the top 11, but of course, feel free to take a look at any of the stocks weighted in the XLF. You know, we could take a look at BlackRock. We can take a look at Chubb. You can go beyond the top 15 and start going further into the list. All those things, of course. But yeah, probably the best looking name, Grace, is Schwab. So it is in the XLF, but it's way down in the 13 spot, which doesn't even make it in the top 10. All right. So yeah, that's definitely one to keep an eye on. But here's what I'll also mention, Grace. Make sure Schwab has liquidity. So when you pull Schwab up on your platform and you start, say, taking a look at the May 17 OPEX, there is good liquidity there. But if you look at May 10, you look at May 3, you look at April 26, it's a little thin. So be aware, if we're going to look at Schwab, it's going to be something along the lines of that May 17 expiration. All right, so that's what we've got going on right now, gang. So, think about, how are you determining sentiment? Where is price in relation to the previous session close? Where is price in relation to, for example, anchored volume weighted average price, the point of control? If you're an intraday trader, where is price in relation to the clearing range, the initial balance? These are all different sentiment reads. Sentiment means what? What are those lines of the sand that would get traders looking bullishly or bearishly? There doesn't need to be just one, but by far the easiest one to do is that previous session close. All right. Okay, gang. And as always, thank you so much for being here for our top tier outlook. I will see you all for charts and coffee in the morning. Be good to each other. Until then, enjoy the rest of your weekend.